Hi there, traders. This is Brad Gilbert with today's trading action. All right, now as we head into the business end of the week, we have the really high impacting or infamous non-farm payrolls. Now, the unemployment rate, non-farm payrolls, the forecast, you can see very clearly there, 4.1 and 170K. But for us, it's important to see what the range is because that's going to tell us a lot about where things are going. Now, let me just come back and just show you the charts, like the dollar index, right? And sort of dollar Swiss. Dollar yen is going down, and so is dollar CAD, right? And a lot of the other pairs, although they aren't sort of shooting up with massive momentum, sterling's probably the odd one out. Euro, Aussie, and Kiwi going up. So the dollar is falling, right? So when we look at the potential opportunity today, like it's to me, the momentum for the dollar is down. So I like to see, in this case, weaker data, right? So when we're looking at the range, a higher unemployment rate would be ideal alongside a weaker employment change. Now, if one of the numbers comes out as expected and the other one's weaker, we still get the move, but it's just not as aggressive, right? And just on, like, it's a bit of a no-brainer which pairs to trade. If we do get weaker US numbers, Euro, Aussie, Kiwi, like sterling is just doing a few weird things. Dollar index, dollar Swiss, and dollar yen, a clear target with Euro for me being the best trading opportunity. Now, there's a couple of things just to sort of put into play here because we're seeing a bit of a weird reaction and you might see something different. Now, Chicago, Fed President Austin Gosby, right? He's come out and said, if we get into a situation where we've got full employment, right? So the unemployment rate just can't go better than 4% or 4.1 and inflation is falling, that opens the door for the Fed to start cutting rates. Now, this is the first time we've heard something from the Fed for a little bit, and it does give us some sort of signal that maybe rate cuts aren't that far away, right? And this is where you can sort of see it, right? Because finally, especially in the long dated treasury yields, the yields are slightly lower, right? So weaker unemployment figures today should see the like an impact on the treasury yields, and that should see the dollar go down, should see equity markets go up, right? Euro, sterling, Aussie, Kiwi up, the dollar down. So we're starting to get back to normal markets after the chaotic week we've had, right? So everything's sort of settled down. We've got some direction here. It's just a matter of really tuning in. Now, just on that, right? If you're looking at the live trade hub, right? And I was just going through the prime time pro analysis, right? Really keeping it objective. And what I mean by that is no thought as my no human thought, right? Short term, are these things going up or down? This is what we're sort of focusing on. And at the moment, Euro's going up, okay? Aussie, Kiwi up, and sterling, well, it's if anything, it's going down, right? And this is the odd one. So I'm saying this is where you got to use a bit of market knowledge because at the moment, right now, momentum, long-term trend, short-term trend for sterling is down. This is in the sell zone. But just be aware if the non-farm payrolls data comes out weak, it's going to impact that trade, right? This is where the fundamentals can take over and dominate direction, right? At the same time, if we get stronger non-farms, well, I'll tell you what, sterling is definitely probably the pair to be trading there out of the top, out of the dollar block. And on the downside, we've got, if anything, dollar CAD, right? It is a bit of a shining light. We've got a mixed reaction here across the board on dollar yen, especially with momentum. But dollar CAD, we have got three up arrows. This is in the buy zone. Once again, stronger non-farm payrolls, you've got to be looking at these two instruments because they are lining up with very clear signals. The rest of them, right? And this is why if you have an objective table like this, because you're like, really? I thought Euro was going up. I thought this was going. No, this is what's happening, and this is the potential opportunities. So just keep a very close eye on that as we go through into that North American session. It's going to be pretty lively. And let me just show you the data. For those traders who are sort of new to trading, I've highlighted the two key data releases, right? The non-farm payroll change and the unemployment rate. But if we have a look across the board here, there's about 6 or 8 different variables. These two are the big ones, but don't discount the average earnings and some of the other payroll data. And that's where we are, right? Like non-farm payrolls, I would usually see the data and then look for an opportunity. But today, I think there's a pretty good opportunity here for, stronger numbers to get into a trade on sterling. And let me just focus on that. It just like you can, and what I'm talking about is, right, for those new traders as well, it's sort of broken back down below that bull bear pivot line. This is probably your potential entry, or at the time of the release, it's overbought. It just looks smelly to the downside, right? And alongside that, if I actually get up the longer term chart, and this will sort of give you a bit more understanding. So we've had a bit of a clean out to the top side, and this is all the Trump sort of twos and fro's. But if I sort of adjusted that, right, and you've still got that bull bear pivot line above the market, okay, once you adjust the trend line, you start to see a bit of a different picture. Like, yeah, we've topped out here above 125 and a half. We've been decked back down to 124 and a half. This looks set for a move back down. All we need is the fundamentals to kick in, and that's where the non-farm payrolls can come into play. Don't forget, you need clean numbers, like as in decisive, weaker unemployment rate and or a lower employment change. That would see the catalyst for a move down. And to me, sterling looks the best. All right. Okay, guys, that's it from me for now, but I'll keep you up tuned, or updated, I should say. And good luck and happy trading. Cheerio.